The markets continue higher, which is not unexpected because ever since we broke out of this wedge formation in the Dow, we knew that we were probably on another wave, the same magnitude wave as this right here. That puts candlestick investors to a great advantage, knowing that there's not a major change of the current trend. It allows for participating in price patterns that are going to produce huge profits. NVIDIA was a good example of this. When it broke out of the wedge formation with an inverted hammer doji gap up through the resistance level of the wedge, that told you there was a brand new investor perspective of what was going on, that there was a new dynamic. So this keeps an investor from being hesitant about buying the stock when it was up 4 or 5 points on the open, because it told us something new was happening, so you could catch this type of price move. That same scenario was applied to our recommendation over the past few trading days. There's a left-right combo, which is one of your strongest bullish signals, and a fry pan bottom alerting us to a potential breakout, which also could create a price move of this magnitude. Again, this is merely analyzing what investor sentiment does time after time. It creates these patterns that the Japanese rice traders have identified for us over the past 400 years of being something that's telling us there's a buildup of investor sentiment. Get ready for strong price moves. Another price move is the bobble pattern. Notice the fry pan bottom. Notice the cup and handle, which is part of the fry pan bottom pattern setup. Also notice what we call a bobble pattern, where it ran into resistance, pulled back, and notice our T-line, which acts as a very high probability support and resistance level. They could never close it below the T-line, and now they've pushed back up through the resistance level, the 50-day moving average. It did it with a doji gap up, your best friend. Makes it very simple. If this opens positive tomorrow, you don't have to be hesitant about buying. It should be in a good, strong price move. And we could see in OCLR, where we started off with a doji sandwich. And then we had what we call a bullish flutter kicker. The doji was sitting right here on the 50 after gapping up above the open of this candle that traded off immediately. I told you they gapped it up on Friday. And we know the simple doji rule that if it opens positive, it's going to trade positive. If it's going to trade positive, it creates a very strong bullish signal called the bullish flutter kicker signal, which is a kicker signal with a little flutter in there. If you took out this doji, you essentially have a kicker signal, which is one of the strongest candlestick signals. That strong signal illustrated that the 50 nor the 200 was going to act as resistance. We can imply very simply there's going to be more upside. Candlestick charts merely show you when there's been a dramatic change of investor sentiment. As we can see in the NetEase chart, there was a left-right combo, a very strong bullish signal, a gap up through the resistance level that if you were following this stock or trading this stock, you knew you could be buying immediately on the gap up, because that's what we expect coming out of this strong buy signal. And the fact that they gapped it up through the resistance level of the 200 told you your next target was potentially the 50, whether it got there today or in the next few days. But even in one day, it went through that level and through the 50. Now we look for the next target, a little gap right here. So candlestick charts tell you when the bullish strength is coming in, and then you can see based upon the charts where the next likely target is going to be. This type of analysis constantly puts the candlestick investor in the right place at the right time, not only to produce a profitable trade, but put you in setups where the magnitude of those profits are extremely strong. That'll be it. We'll see you in the chat rooms.